So I think that in terms of the yuan itself, the risk actually in the near term, given that there's a lot more in the pipeline on potential negativity, we could see dollar CNH actually break 720 and possibly even trade towards 7.35 before the US election timeframe. So I do think that this political negativity is continuing to build. It's something that will continue to worsen in the months ahead. I think the thing on the trade front is it's quite clear from the data I've seen so far. It's still very early in terms of data, but the data that I've seen, it shows that China will not be able to meet its trade obligations according to the phase one deal. So what's going to be absolutely key to me is by the end of June, there is this trade framework group meeting between the US and China. That's the opportunity for China to actually open up this potential renegotiation of phase one. I actually think the risk is that, because given what Trump has already said about renegotiation, the risk is that this will not be renegotiated. And the risk that if China admits that it cannot meet these targets, then actually Trump in the months ahead could actually go forward with tariffs. So there's huge potential negativity around politics, trade, all of this running into the US elections.
Craig, and that's interesting because you could say that that hasn't been priced in yet if you look at where risk appetite is at the moment. And I'm curious how this plays into your view of the dollar, because a few strategists have said, okay, look to the dollar. If the dollar starts to weaken substantially, then we know we've really turned a corner. I mean, do you think we have turned that corner where dollar weakness will be the story?
I don't think we have yet. I do think that the China developments will remain a big focus of markets in the coming months. We've just seen this severe intensification of negative political developments over the past just 2 weeks. I think there's more to come. I think that will hamper risk sentiment overall, broadly speaking. But I don't necessarily believe that the dollar will strengthen substantially on the back of this. I think it's once we get past what people perceive as the kind of peak on US-China negativity, all these events that are impending, then perhaps people could start focusing on some of the other fundamental factors that I mentioned around economies recovering, about COVID being more stable, about Europe coordination, about all the previous global stimulus that's come through and the stability in global markets. Maybe then the market can really start considering the softer dollar view. But I think in the next few months, it's really going to be a fine balance between the two, China versus all the global developments.